The Brian Crabtree Show on Demand is brought to you by the Cobb Chamber of Commerce. Achieve more. CobbChamber.org. The Brian Crabtree Show, live in Atlanta, afternoon starting at 4 on Biz 1190, Biz1190.com, and the Biz 1190 mobile app.
Wait, I've just got the latest late-breaking monkey news.
The Brian Crabtree Show.
The Brian Crabtree Show.
So buckle up, okay?
Tune him in every day. Wonder what he has to say. Daring and he's fearless. He's your talk show man. Talk show man. Hey, come on, take an issue, shake it up, take a moment, call him up. Here comes Brian Crabtree for your radio talk.
All right, good to have you. Another hour. We'll get into some of Trump's tweets, the controversy surrounding his latest attack, so to speak, on a federal judge who blocked his order on sanctuary cities, defunding those cities who don't comply. Plus, here's a question for you. Was Obama, in that context, right to withhold funds over transgender bathroom bills? That, a whole lot more. Trump's tax plan coming up. Don't go anywhere. Joining us now, Mike Iverson, SnellingsWalters.com. Snellings Walters Insurance here in Atlanta, our insurance expert. We're going to change gears a little bit today, Mike. Good to have you back.
Good to be back.
I could really go off on Obamacare, but then it would be a very negative segment. I had to, so I'm not going to put you into that. I had to email you for some advice this week. You gave me a guy who then gave me a guy, and we're going to see how insurance works out, but having lots of Obamacare problems, but I won't bore the audience with that right now. You proposed a topic, and one of the sentences in your proposal I really like because I want to know the answer to this. So let's back into this in a way you didn't expect, probably. How do you argue with an insurance company? I want to know the answer to this question because I have never found that any argument I've ever forged with an insurance company was ever successful. Give me some insight, business or personal. How does that work?
Yeah. So first, thanks for letting me use your microwave. I did take the time to heat up some fish, and it was fantastic brain food to get me going.
Was it
in this
tilapia
session.
or crappie?
No, I went with salmon because salmon is very distinct, and it's the gift that keeps on giving.
Did you have some broccoli and some collard greens and cabbage along with it?
No, just old salmon.
You can stink up the whole freaking building.
So we'd
like to thank our front desk receptionist for that. Lovely woman, but she stinks. All right, go ahead.
So I think what people have to realize, and we hear this over and over with people, and it happens in the healthcare arena, it happens in all their other insurances, which they're left saying, hey, the only way I can find out whether our rates are competitive is by bringing other insurance companies in. And when we argue with our health insurance company, if we're buying group health policies, we're left not knowing even how much money they made off our group. How profitable were we? We're not even armed to argue with them. And so in the end, the question is, how do we better arm people? And in our case at Snellings Walters, a lot of the things we do is we'll bring in actuary. And so
what is that for the
actuary is just imagine this for all the listeners out there. There's actuarial firms that all the major health insurance companies use, Blue Cross Blue Shield, Cigna. They actually all buy data from one particular actuarial firm that monitors about 92 million lives across the United States. We get the same data sets for them. So what we know is we know the same algorithms that Blue Cross should be using in their renewal process, and we can arm our clients with that information to know whether that renewal looks good or looks terrible. And we can give them greater insights into what their plan will do over the X number of years. Cast it for 5 years. We can do predictability models and look at it over 5 years and say, you know what, maybe you ought to self-insure, or you know what, that renewal you have right now is great. There's no reason to go through the monstrous process of trying to shop your insurance because actuarially, the algorithms, sometimes underwriters do their job, sometimes they don't.
So when you're saying self-insure, I mean, I think you're probably referring to businesses where there's a big pricey insurance policy, and then if you self-insure, what does that look like? Why would a business make that decision? Just to try to, is that gambling? Is there risk in that? How much is it? And why would they do it?
The reason you would do it is you're outperforming the marketplace. If you think of it this way, insurance companies have to use filed rates. They just have to use filed rates, and they can only deviate a small amount on those rates.
Standard allowed rates in the state or wherever the model is.
They file them in each of the states. And so there are preferred risks. There are companies who have the young and healthies, who have better practices, who drive better behaviors. All of those companies, when we model those things out, we can say, hey, over the course of 5 years, this is what we expect your plan to do. And it's not advantageous to go into the box of insurance that you would get from a Blue Cross Blue Shield or somebody else. You should take some of that risk on yourself. You're right.
How
we
do you
should
do
limit
that?
those
Do
risks.
you still have some catastrophic policy coverage,
Yep.
but you basically, worst case scenario, multi-million-dollar problem, but you take on a massive deductible? How does that feel?
Yeah, the easiest way to explain this for people is it's no different than your personal health insurance. You're choosing a deductible and a maximum family out-of-pocket. Imagine an employer buying a deductible on each employee and then buying insurance that says, hey, let's limit our maximum out-of-pocket to this amount. So they're literally just self-insuring a small section, and they buy insurance over the top of everything else.
This is a small potatoes layman's example of this, but whether this was errors and emissions insurance for a doctor, real estate agent, or it was general liability for a big multi-billion-dollar business, doesn't really matter. So you have a 1-year policy, and these things renew annually. And let me use a personal example, something I just went through I found kind of odd. I have a Honda side-by-side. And it's one of these off-road, $10,000, $20,000 things that you ride around.
Many wealthy people have these.
Yeah, hunting with. And I wouldn't say I'm wealthy, but if you want to call it, it'll make me feel better about myself. It's been a rough week. So this thing's worth about $12,000. So I paid $318 to Progressive last year, and I get the renewal. It's $580. Like, it's a year old. It's worth less now than it was then. And I'm like, I'm not paying that. So I start shopping around. I found Nationwide was like $315, $320, and then State Farm was $238. There's a two-part question here, and I think it applies to insurance. We could be talking about $100,000 for the insurance. Why is it that you go into one policy and then the annual renewal comes up and it goes up nearly double or 50% in some cases with no claims, no change in your profile as a business or as a person, but then you shop around and you find these greatly reduced rates for the same coverage? Why does that exist in insurance? I don't understand that.
Yeah. So I think that the real answer is everybody starts out in their niche. Once they start to dominate that niche, their results start to deteriorate.
So they buy the business.
They buy the business. Over and over, you see this. You'll see insurance companies, they kind of turn it on and off. And they do this with their underwriters. And we are in the day of big data. Big data, meaning these insurance companies are so armed with data. They're aware how often most customers will shop. They're aware that if they take a 7% increase, only 5% of their customers will leave them. So they are now a +2 on their renewals.
So they basically say we'll lose 2% of people, but we can increase the price 7 to 10%, which means we got more money. And so they do it. By the way, Mike Iverson with us, SnellingsWalters.com, Snellings Walters Insurance here in Atlanta. How do people or businesses avoid that treadmill, hamster wheel, vicious cycle?
Yeah.
How do they avoid that?
I think the main thing people have to do is stop buying on an annual basis. Whoever your advocate is or advisor, broker, agent, whoever you're working with, you should be saying, where are we headed over the next 3 to 5 years? And you ought to come up with some very succinct goals with measurables behind those so you know whether you're moving toward that goal or moving away from it. And once you start to crack that egg open and actually look at all the details inside, and if you don't have access to data, you're going to lose. I can give you that guarantee right now. It is all about knowing and understanding your data. And on a very, very small basis that might make sense. You have a deductible on your car. Why? Because it didn't make sense to go without a deductible. The savings made sense. Well, most employers on group health plans put the deductibles on employees. And they don't realize by bringing some of that on themselves and looking at it on a 5-year basis, they may have one loss during a year, 1 year that they lose money. The other, they'll have 3 winning years and 1 break even. So over the course of 5, they'll find consistent wins.
I'm speaking as much as a person, but I did operate as a CEO, and I would have been the type of business that would have certainly at that point done business with you. Multiple offices, I do business with you now on property, but I would have had a whole package. It was tens of thousands of dollars a year in insurance, errors and omissions, the whole thing. And back then, it was easy to sit down with a broker or an insurance company because big data really wasn't the thing from 2002 to
That's
2008.
right.
It really kicked in about 2010. That's really when it started to really become enormous. And now I look at the world and I think if I was running the same company, I'd have to be an expert in big data, or I'd have to have experts on my team, because I would feel overwhelmed and cheated at every step along the way because I don't have access to all of that data. And many of us are feeling extremely overwhelmed by the advantages big businesses have to take advantage of us. How do we avoid that? Small business, medium business, large business, or individuals, how do we avoid that other than just consuming massive volumes of spreadsheets?
You're not going to like the answer because of how simple it is. Demand more.
From who?
From your agent-broker relationship. This is something you should be interviewing people, us. Take us out of it. Just say, whoever you're dealing with, you ought to be demanding more. If you can't get a 3-year plan worked out with them, you should say, is this the partner that I need? Because shopping insurance, particularly group benefits or even a large corporation, the process, getting all these people to look under the hood, the disruption to staff, if you're changing your health plan every year and you want your employees to think, hey, this is a stable employer who's great to work for, and every year they're changing their health insurance, what do you start to believe about your employer?
Well, they don't know what they're doing.
Yeah, and
much.
you think that they're constantly switching for the lowest price because usually there's an implication to you. So somehow you got to find a way to get out of that cycle and cast a better message to your employees.
That brings up a sore subject for me. And again, without getting into my personal insurance situation right now, I will, because I want to share it with my audience, but it's not fitting at this moment for context purposes. I have a mess with Ambetter. It's just a mess. And it's not like there's anybody unhealthy or there's a big problem. It's just not functional. And for more than one reason. And for the first time in my adult life, it actually is attractive to me to have to put up with corporate America to think about having the benefits package. Because dealing with just my personal small business owner insurance for health is a freaking nightmare. And so I have to imagine that you get a lot of people that come your way that have a multitude of employees. They're shopping around to change brokers or insurance companies in regards to health specifically. And they're just beside themselves and can't figure things out because this is a critical factor for businesses. If you have a great, solid, stable health insurance offering, that'll save a business tons of money because that benefit is so invaluable at this juncture in time. Fortunately for them and unfortunately for us. Speak to that for a minute. Just respond to what I just said.
Yeah, I think small businesses are in a pinch. And I think I look at some of the things we're doing. We have some really great minds in our organization working with associations right now and doing some things inside of those associations to drive out some captives and some association plans which don't have to follow the ACA guidelines when it comes to rates.
You're talking about like if it's a plumbers association or a real estate association.
That's it.
You group all those individuals together to try to create something that's powerful for the marketplace.
We are seeing the birth of these at an unusual rate. It is really pretty remarkable. And even if you aren't in one of what I'll call the preferred class, which is kind of the young healthies, it's coming your way. Because all of the young healthies and all the firms that have an opportunity to move into some of these captive insurance products, what happens is they start to leave the risk pools. Everybody else, when the clean stuff leaves the pool that you're in, right? This is allowing Joey to consistently swim in my pool. It gets dirtier and dirtier every day if I don't have any clean water to throw in with it. Yeah. And so the clean water's leaving and the dirty water's getting worse. And it's why everyone's seeing their rates go up. And so most business owners, they're trying to say, hey, Mike, how do we get off this wheel? How do we find cleaner water? And the answer is stop swimming in the same old pools of a traditional insurance company.
But doesn't that create a situation where you have to keep moving around from which insurance company you're with, or is it just finding a different, more, I hate to use the word elite, but a more elite offering? Is that what you and in that pool, they don't allow the dirty fish-infested water?
That's exactly it. That's exactly it. I mean, imagine this. You're going to insure a young new driver and you for the exact same rates. Okay?
That's not a good idea.
And we'll give you the average rate. Okay, there's 2 young college kids and 2 of you, Brian. One of you can leave for a much lower rate because I'm guessing that you have decent driving history and you've been driving for a while.
Yeah.
And so now what happens to the one guy who's clean that's still doing average rates with these
sky high?
They start to explode up. And
that makes a lot of sense.
That's what's happening in the market.
Mike Iverson with the SnellingsWalters.com. So when you look at these associations, this is very intriguing. I didn't know these were in existence. So if a group of realtors or a group of home builders gets together, which are, notoriously struggling with health insurance and insurance of all kinds, that's the reason I bring those groups up. How does an individual realtor get into, or an individual home builder who's struggling for health insurance, get into that association? Because companies like yours deal with the businesses, and do a great job with businesses, but you don't deal with individuals because they don't pay you anymore.
Yeah.
So you have to do it where it makes business sense for your firm. But how do the individuals engage with that opportunity you talked about?
Yeah. What you'll see these associations start to push their plans down into smaller and smaller numbers because they realize with their own underwriting, they don't have to play the same rating scheme. So they can just say, hey, our plan is for people who qualify, and they'll have a tougher qualification. You're going to have to be a little more clean to get in their risk pool.
But who sets that up? Is it does an insurance company set it up and invite people in, or does an association of realtors, an association of home builders?
Yeah,
they set it up for their members specifically, smaller and larger.
Many different ways
and
to
then bring
form
you
it.
in. Are you seeing a lot of that in Metro Atlanta?
Yeah,
yeah.
We're getting involved in more and more of these to set things up for a longer period of time, and whether it's associations. I can think of one right now. We work with the Landscape Association. It's called the Urban Ag Council, and we're doing some really remarkable things inside of that association.
So if you're an association in Metro Atlanta and you have 100 people or 1,000 people that are a member of your association, then they could call you, the leaders of the association, and say, we want to help our members acquire an insurance product that can be cheaper and better and stable, and they could call you up and set that up, and then it could be offered to their members.
Yeah, and I don't want to create the false promise. Usually we start with and look at it from an actuarial standpoint. We say, how do these people rate versus everybody else, and what are the insurance companies charging? We can model all of that stuff in-house, and we can say, you know what, there's a 30% margin inside of this industry for health insurance companies. It's time to peel out and do some self-insuring.
And so the association can take that on, and you can structure. That's intriguing. I didn't even know that even existed, because that's something I've thought should have existed for a long time. And it kind of did back when I was running my company, but I could never get it off the ground because there wasn't an appetite as there is. There's an appetite for solutions.
Premiums have exploded. Premiums have exploded. Your rates nuts. Today versus 10 years ago are nearly 3 times the size.
It makes me sick.
So the bigger the math, the bigger the numbers, the more flexibility you're going to have to design something. And so I'm not a fan of the Affordable Care Act, so don't get me wrong. However, I will say the Affordable Care Act has been remarkable for Snelling's Walters because the things that we've been able to do over the past number of years, we've exploded inside of a couple of our departments with some really great ideas that are sustainable solutions. And so, ironically, I'm thankful for it because it's been very, very good to us.
And I don't blame you for being thankful. It's just like a massive foreclosure crisis is great for the Crabtree household. We get to buy a lot and sell a lot. My wife works for REOs and banks, so it's not that you wish that on people, but if it happens, you sop it up, and you got to do it. It's just smart business. You have to be opportunist.
Hey, one other thing I'd throw in there, all of these same risk pool things that I'm talking about, they exist for any insurance coverage. Even workers' compensation. I can think of a manufacturer that we work with spending $850,000 a year. Their average losses were $70,000 a year. It doesn't take a rocket scientist to say, is the insurance company making good money on that risk?
Yeah, they're making
a ton. So we chose to pull them out and to do a self-insurance program where they may take on as much as $450,000 in personal risk in any one year, but their insurance costs, so we set up a claims fund with $450,000. Their insurance costs were $200,000. What does that mean? It means in the worst of worst years, they'll pay $200,000 less than they used to.
Wow. Well, we'll leave it there. Phone number?
770-396-9600.
Mike Iverson, SnellingsWalters.com online. Always great to have you.
Hey, and thanks for the fish. It was a very tasty lunch.
Don't ever do that again. All right. Don't go away. We got to clean the air here.
The Brian Crabtree Show on Demand is brought to you by the Cobb Chamber of Commerce. Achieve more. CobbChamber.org. The Brian Crabtree Show, live in Atlanta, afternoon starting at 4 on Biz 1190, Biz1190.com, and the Biz 1190 mobile app.